You often hear that you need to take the emotion out of your trading so you can make good decisions. But is that possible, and how do you do that? We're going to be talking with Anthony Drager today. He's a full-time trader. Anthony, thanks for being here.
Thanks for having me, Tim.
All right, so when you say take the emotion out of your trading, what do you mean by that?
Well, you have to strip it out. People have to realize that they're putting themselves in a state of mind. When you're risking your own money, you don't know what you're capable of doing. So you have to strip that element out. And so what I tell people is, you have to, in order to strip emotion out, you have to strip the element of surprise out. If I'm walking down the street and someone jumps out at me, I don't know how I'm going to react. But if I know where all the monsters are, which are losing trades, you're going to act and react in a better fashion. And so if you know where your exits are before your entries, you're in a much better position to strip that element out and therefore control your emotions. So many people are worried about, well, where's the market going up? Where do I buy it? It should be, well, where do you sell it after you buy it if you're wrong? Now you're not surprised and you're not emotional.
So is it about trading or planning every trade before it actually happens?
It's planning your preparation is where the work is. The execution should be seamless and easy and robotic. See, the reason why people get trading, I think it's a little tougher for most people, is in real life, if you're unemotional and you're robotic, you probably don't have a lot of human connection and you're probably pretty lonely. But if you're robotic and emotionalist in trading, you're probably wealthy. It's just the opposite of what it takes to be successful in trading than in every other business practically and in real life.
So we've seen all the time where someone can come in and paper trade and demo trade because there's not real money on the line. They don't have that emotion. Immediately when they use real money on the line, everything changes. Is there a way to kind of bridge that gap so you can try to make that transition?
Have a plan. Know where you're getting out before you get in every trade, and realize that being wrong is okay. Being wrong isn't okay in real life to most people. It's not okay in most businesses. It could be catastrophic, but being wrong in trading, you often get rewarded for it. And so you have to be okay with being wrong and not let that surprise you. That's a complete plan. Know where you're going to get out, for losers especially, because not only do you manage your emotion, but you manage your risk. You know where your winners are, you know where your losers are. Is that reward-risk ratio in line? Is it upside down? All that's taken care of. So if you were to ask me, Anthony, how do you manage your emotion? How do you manage your risk? I say, I don't. My strategy does. And that's what I try to convey to people.
So how do you know if you're just wrong temporarily? Maybe you've got 2 or 3 trades in a row that don't work out for you. How do you take that next trade, that 4th trade, with that same conviction as you did the other 3, knowing you've lost for the previous 3 trades?
Well, it's experience, and it's knowing that, hey, if you don't want to get to 10 or 20 trades in a row that you lost before you know you got a bad strategy. There's a difference between having a good strategy and a bad strategy as far as taking losers, but you have to have experience to know that 5th trade should feel like the first one did, or after 4 winners. Some people are apprehensive to take a trade. It has to be robotic, and if your strategy is decent, your trading should be decent. The problem is a lot of people have a good strategy and they screw it up because of this emotion that we're talking about.
Anthony, thanks for your time.
My pleasure, Tim.